All right, hello, welcome traders. It's Friday, November 1st, 2024. We're down to the last 2 months of the year. So we're cranking along. Had a great month that we just put to bed yesterday. So I'm going to cover that. We're going to cover what we did for the month in all of our accounts. So we're going to cover the main trading account that I trade. I'm going to cover my investing account that I share online with everybody. And we're going to cover the small account, which we don't spend a lot of time on YouTube here, but I'll cover the small account as well, show you what we did in all three accounts. But before I get into that, I want to talk a little bit about following your process, and then hopefully when you're doing that, your profits will follow. But it's really focused on the process. So let's get into that. I want to spend some time on this because I think this is really, really important. And I think this gets in the way for people is, and I see it every day where people are focusing on their profit and loss or their P&L, and hey, my P&L is down. And to be honest with you, my P&L is actually down for 2 of my 5 or 6 accounts. And the reason for that is I'm in bonds, and bonds have been falling for weeks since the Fed first announced that 50-point cut, and bonds have just tailed off since then. And I'm in bonds, and I've sold naked puts on bonds. We have quite a few in the trading account, and we have some in the investing account as well. But it's all good. It's part of the plan. We know things are going to go up, things are going to go down. Not every trade goes the right direction immediately, and not every trade always finishes there. The key is following your process and not getting caught up with all of the other things that are going on and the noise out there, and focusing on, my P&L is down today, it's down today. Yeah, your P&L can be down, okay, but you don't actually take a loss until you close that trade. So learning how to adjust and keep your emotions in check and understanding your process and following your plan is really going to make you a much better trader. So let's talk a little bit about that. So here's a piece of training that I've been putting together, but just following your process. And if you do that, I believe the profits will follow. So the key here is to develop, trust, and consistently follow your trading process to help, achieve long-term profitability and mental discipline, which are keys to trading. So what's just quickly, the importance of a trading process. I've talked about this before. Having a structured, repeatable approach to decision-making and trading, including your entry, your exit, and your management criteria, is important. So, but why follow this process over the profits? Okay. Why focus on the process of things? So following a process is going to minimize those emotional decision-making pieces that you take. That's going to be essential for your long-term success. We want you to focus on following the process. Okay. And even in sales training and in business, where I've done some consulting for many, 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 many years, we focus on the process. We praise the process. I praise those people that follow the process, and the results are going to come if you focus on the process. Focusing solely on profits can lead to impulsive actions, whereas a process-driven approach can align, with discipline and strategy. Again, focusing solely on profits, and I should even put in here, or your P&L. Okay. Let's fix that. Can lead to impulsive actions. Consistency in process is going to drive your results. Just follow your process, understanding it. So what are the components of a solid trading process? So for trading, number one, market analysis. I want to have a good, reliable method for analyzing the markets. I'm big on selling premium. I love to sell longer-term contracts, typically. But I love to sell naked puts, whether it's in the trading account where we're trading more futures and trades like that, or in the investing accounts, or even retirement accounts where we're selling leaps or we're selling naked puts on high quality underlyings. Okay, the trading account is focusing a little bit more on the technical analysis, but we're still selling. I'm looking at different moving averages. I really focus on the 21 and the 50 EMAs. I'm focusing on the RSI, maybe even some Bollinger Bands or stochastic momentum. We do a little fundamental analysis. We'll look at the company's performance in our investing accounts. I want high quality fundamentally sound companies that have year over year, decade over decade earnings growth, revenue growth. They survive downturns just like we do. Okay? If you can survive sell-offs, you can survive downturns, you can survive losses, and always keep coming back stronger and better, okay, that's what I'm looking for in those companies. Okay. And then sentiment analysis as well. Maybe we'll take a look at some market news or trends, but really that doesn't factor into a lot of my decision making. But I also want to make sure we have entry criteria, clear signals for entering the trade. When do we enter? How do we enter? What's the basic setup for entry based upon those predefined indicators? And we only want to enter when things align for us, when we really feel we have the edge. And then risk management, okay, position sizing, okay, stop loss placement, profit targets. Okay, I want to make sure that we've accounted for things correctly. Even in our bond trades, which are down right now, I feel we're position sized okay. Now, the fourth piece here is review and adjustments. Okay. Reviewing trades consistently to assess the alignment with the process, and then making adjustments, okay, based upon the different strategies in your plan. So risk management, sizing initially correctly, and then also adjusting those trades or having the plan on how you're going to handle those trades. Okay. For me, if something gets into a little bit of trouble on having a long naked put, or not long puts, but short puts or naked puts on something, we have a couple different options. Number one, we can stop loss at maybe a 2x stop or something like that. Number two, we can obviously take profits at 50% or 90% or whatever, depending on the different trades that I have. Number three, we can roll out and potentially even down, if possible, for a credit, giving ourselves more time to be right if our thesis is still the same. And on bonds, my thesis is still the same. It's a little shakier now than it was. I really felt with the Fed cutting, inflation being under a little bit more control, that we would see a nice pump in bonds. Inflation may not be quite where they were expecting it to be. Fed's still going to keep cutting. I think we've got a couple factors out there that's really influencing, but bond pricing, and you're seeing rates on the longer end are rising a little bit more than I certainly expected, because I expected inflation to be a little bit more under control than it is. The economy is cooking along pretty good, which means maybe it's not under control as much. Doesn't mean we'll be wrong, but we do have to make adjustments on our trade. My thesis is still pretty good, so I'm going to go with number three, which is rolling out. Okay. And then number four, potentially I could take assignment as well, which I'm willing to do and wheel out of it. Okay, so I'm okay taking assignment after I rolled. If I can no longer roll for a credit, then I'll look to potentially take assignment if I still believe in the underlying, and then I'll look to write calls against it until I'm called away. Okay. I have the time. We don't have it. That's such a gigantic portion that that's going to kill our portfolio. We simply play the strategies that we have. And the benefits of having this process-driven approach, number one, psychological resilience. It's going to reduce stress and anxiety associated with those unpredictable outcomes, building confidence in your decision-making through consistent actions. I feel pretty confident. I'm not stressed. I'm not anxious. I'm okay. I know the plan. I know the process. I've seen it before. Okay. There are times when every single trader gets into trouble with a trade or two. We've all been there. I've had a couple this year. Okay. Going to have a couple every year. Okay. Markets don't just go like this all of the time, even though this year it's pretty much like this. Okay. We had a nice volatility spike that happened in August. Great. We adjust. We figure it out. Okay. We're back on the plan. Okay. Now we're in bonds, having a little bit of a tough time. So great, we adjust, we play our trades, and then we're back in shape. Okay, it's a consistent confidence of we've seen the movie before, we know how it can play out, and once you've seen it, I think you're a lot more confident in how you do that. Emotional control as well. A process is going to act as that safeguard against making impulsive decisions driven by greed or fear. If you're worried that, oh my gosh, this thing is going to zero, the world is ending, when you have that fear, it's going to influence your trading. But if you have a solid process of, this is what I'm going to do. Okay? I'm going to continue to wheel this thing or take assignment or roll or whatever your process is on there. There's a lot of people trading out there selling premium. Okay, the wheel strategy and so forth, big thing. You know, for many YouTubers out there on the wheel strategy, and it's all good. But many times you do get assigned. Well, why did you get assigned? Well, the stock dropped, or maybe it was a crappy stock and you got assigned on something. Well, now you got to try to wheel your way out of it. It's all good. Okay? If you have quality underlines and you have a solid plan, you're going to be okay. All right. So emphasize again the process over the outcome, going to reduce your attachment to that trade outcome and learning the process. Okay. Also, improved learning curves. Following a process highlights areas for improvement, learning from mistakes and successes by identifying patterns in your actions. And so making sure that you're always learning and constantly improving. So a couple things here that I want to cover before I jump and I'll share my accounts with you is stay committed to the process. Number one, have a routine. Times for market analysis, trading, and review. Typically, I log in the morning, look at the markets, look at my positions. I have a plan of what I'm going to do each day. Number one, is there anything in trouble that needs to be dealt with immediately? Okay. If so, what's the plan? Okay. Number two, what's my buying power? Do I have room to add more trades? If I can, I'm going to add more trades out there according to my plan. Okay. So my routine is pretty much the same. I don't stare at my screen all day long, okay, to see what my P&L is. You know what? I'm up 1,000. I'm down 1,000. I'm up 5,000. I'm down 5,000. I'm up 200. I'm down 200. That would drive you crazy. You can't do that. You look, anything need to be adjusted? No, everything looks good. Is something close to being a problem? Then maybe I have to monitor it a little bit during the day, but typically I would just take care of it and move on. Number two, have a trading journal. Log every trade. I log every trade. I share those with you guys here. I don't always log my reasons for entry and exit or my emotional state, but I think those are great for people to do. I can usually go back and figure out why I got into that trade because I'm very consistent on what I do. And number three here, set process-oriented goals. Instead of setting profit targets, aim for completing these daily or weekly routines. For many of you, the profits will come down the road, okay, if you have the plan and the process. So I hope this was beneficial to you. Let's jump into the accounts. We'll give you a good recap of October, and then we'll cut you loose for the weekend, and you guys can have a great rest of your weekend. So let's take a look at where we are. Let me share my screen with you. And again, I'm just getting over COVID, so I'm trying to make it through here without coughing. I have not had a lot of videos out in the last week or so because it's hard for me to even talk more than 15 minutes without coughing or having a problem. So I'm making it through this one today, so I feel pretty good. Hopefully by next week, we'll be back out to, there we go, getting into a regular pattern of putting them out. All right, so last month, for the month of October, we generated $7,937. That was a 2.25% return on our net lick. So our overall realized gains for the month in the main trading account, almost $8,000, a little over 2.5%, a little over 2%, 2.25% is where we ended up the month. So good month overall. Our net lick is down a tad right now, mainly due to bonds being down temporarily until we work our way through the bond trade, but everything else going really well according to plan. So we're just following the plans, but a great month, almost $8,000 in income for the month in the main trading account. If we take a look at the Lazy Trader account, and I call this the Lazy Trader account. This is my investing account that we share with people. I do have more investing accounts on my own, but this is the one we share with all of you out there, and we share with our members in the Discord. We were up $7,490 in this account. So another $7,000 account. Net lick, pretty much flat for the month. We do have a little bond exposure in there, but this account was up 3.04%. So we were over 3% in a non-trading account. So this is the account, the lazy trader account, where we don't make quite as many trades, although you can see on a daily basis, we've had some realized gains or trades or something like that coming off because we've done a little bit more to enhance it. I would expect some of that will slow down as we really get this portfolio dialed in a little bit more. But 3% return on an account that I'm only shooting for about 1.5% a month. That's the goal. 18% to 20% a year is all I'm shooting for. This is a portfolio margin, a PM account. I do not trade futures in here. These are longer term plays. We're heavily into SPY, QQQ. We also use VOO for the S&P 500. We've got some quality names in there like Google and NVIDIA. We just got out of JP Morgan today, so you can see the 1,044. That was a leap on JP Morgan, hit about 50% in a month. So instead of hanging on longer, on a 180-day trade, if we get to 50% in 30 days, I felt that was good enough to take that off ahead of the election as we start to prepare for the election in this particular account. So overall, 3% on the initial starting net lick for the month. Almost $7,500 in gains. So great month on our investing account. And then if we take a look at the small account that we have, so the small account sitting there right around $10,000 account that we work with folks, we generated $770 this month on this $10,000 account, sitting there right around 9,200. It's down fractionally too, because there's a little bonds in here too, but we're all good with it. We're not close to those bonds being in trouble at all. But overall, that's a 7.73% return. So an 8% return in this account for the month. So a really, really good month overall. We've got some poor man covered calls in there. We're trading MES futures. So we've got 112 trades in there generating good cash flow for us. So we've got the 112 trades working. We've got some poor man covered calls working. We do have a bond trade in there that's been okay anyway, and a few other trades that we've been in and out of, doing some put credit spreads in there to generate some cash. So overall, really, really good month for our portfolios, averaging right around 3% for the month. Totally fine. That's what we're shooting for. In fact, even in the investing account, I'm only shooting for 1.5%. And in the trading account, we're shooting for that 2 to 3% range. We were short of 3%, but we were over 2%. So a really good month there. So overall, things are in great shape. We'd love to see bonds start to level out here a little bit. But even if they don't, we've got a plan. Okay, we'll roll out. We'll give ourselves some time. And in the meantime, while I'm rolling those naked puts out, I have been writing naked calls or turning those into strangles as I go. So we've been generating cash to the tune of almost $3,500 in cash that's unrealized right now that we will probably realize next week. So I'm looking to close out some of these naked calls and rewrite them again. So we've been taking in, we've already booked, I think, about $1,500 of that $7,700 in the trading account is from naked calls on bonds. So while I'm waiting for bonds to kind of settle down and we roll out, give ourselves some time, and we make those adjustments, in the meantime, we're just generating cash. I've got call credit spreads. I've got naked calls working. All of those are paying off great. So we're making money as we go. We just have a little bit of a drop in the net lick, which is all good. Okay. The key here is don't get all caught up with looking at your net lick every single day. Follow your process, work on your individual trades and your gains and losses. And as long as you continue to put on good trades, follow your plan, are generating positive realized P&L, your net lick is going to follow. All right. Have a great weekend, everybody. If this was helpful to you, go ahead and please click that like button down below. I'd love to have you watching this. and help me out a little bit with some likes. If you're not a subscriber to the YouTube channel, go ahead and click subscribe. And if you want to see what we're doing in the Discord on not only the trading accounts, the investing accounts, the small account help, come and join us, see what we're doing great stuff, some really new innovative stuff with the 112 trades and with our investing accounts, with the leap strategies, covered call strategies that we're doing. I think you'll really love what we're doing. All right, we'll see you guys. Take care. Have a great weekend. Bye-bye.